Booyah! The moment of truth is coming for Opendoor Technologies, OPEN, the iBuying pioneer that's been a house of pain for investors. This Thursday, August 7th, Opendoor reports Q2 earnings, and it's a make-or-break moment for the entire iBuying model in a high-interest rate world. Can they finally turn razor-thin margins into real profits, or is it another chapter of disappointment? The bulls and bears are ready for battle, and you need a plan. Hope is not a strategy. Stick around as we break down what's at stake and how to protect your money. Let's rewind to Q1 2025. Opendoor surprised Wall Street with $1.2 billion in revenue and 3,450 homes sold, proving they could still move inventory. The real win? A 5.1% contribution margin and slashed operating expenses down to $90 million. Management finally showed discipline, focusing on cost control and smarter pricing. This wasn't a home run, but it was a solid double. Enough to keep the bulls interested. Q1's progress set the stage for Q2, raising expectations and putting pressure on management to prove it wasn't a fluke. Now, they need to show us the money. Again. The turnaround story hinges on this next report. Here's where it gets wild. Opendoor is now a meme stock, with sky-high short interest and an army of retail traders ready to pounce. Good news or social media hype can trigger explosive short squeezes, sending the stock soaring, just like we saw recently. But what goes up can crash just as fast when the hype fades and shorts reload. This is a brutal tug-of-war, fundamentals versus momentum, bulls versus bears. The Q2 earnings report is the ultimate catalyst. A strong report could ignite another squeeze, while a weak one could crush the meme crowd. For a moment, fundamentals will matter more than memes. Both sides are locked and loaded for the next big move. This is the battleground. So how do you play it? 3 choices: buy short the stock, trade options, or wait it out. Bulls bet on a turnaround and buy. Bears see doom and short. Options traders might use a straddle, betting on a huge move either way. But options are pricey, so the stock must swing big to profit. Or you can sit on the sidelines, let the chaos unfold, and make a decision after the dust settles. Sometimes, the best trade is no trade at all. Know your risk tolerance. Are you a gunslinger or a disciplined investor? Decide before the numbers hit. Don't get caught off guard. This stock will move fast. Let's be clear, this is not a stock for the faint of heart. High mortgage rates threaten Opendoor's business, and their debt load is a ticking time bomb if the market turns. Meme stock volatility means price swings can be wild and irrational. You might be right on fundamentals and still get wiped out by sentiment. Practice ruthless risk management. Use small positions, set stop losses, and never bet more than you can afford to lose. Do your own homework. Read the reports, listen to the calls. In this high-stakes game, you can lose it all. Booyah!